Welcome to Wichita Liberty TV with Bob Weeks.
Hello, I'm Bob Weeks for Wichita Liberty TV, your weekly source for news and commentary about Wichita and Kansas government and politics. We're broadcast on KGBT and its companion website, wichitachannels.com. Some of you may know me from my blog, The Voice for Liberty, at wichitaliberty.org, where the motto there is individual liberty, limited government, and free markets in Wichita and Kansas. So I mostly cover Wichita, Sedgwick County, and Kansas, although sometimes with all the national events taking place, it's hard to keep a focus just on the local things. But the local things are important. I try to cover things that may not be covered by the Wichita Eagle or other television stations or radio, or if we do cover the same news, I'm covering it from the perspective of economic freedom, limited government, and individual liberty, as these are the things that are important, and these are the things that are so often under attack by our governments, federal, state, and local. So please visit wichitaliberty.org. There you can subscribe to the email newsletter I send 2 or 3 times a week, and if you want to contact me, you can find my email address and telephone number there, or the email is pretty easy to remember, bob.weeks@gmail.com. In Wichita, many people are calling for an expanded public transit system, which is to say, more buses. And I fully expect that soon we'll be asked to vote on a higher sales tax in Wichita. Some of that tax would go to the transit, the bus system. But, other people are going to want their share of taxpayer funds too. And I can easily see a call for part of the sales tax to go to funding a new downtown library and some more to fund downtown development. And Wichita Mayor Coral Brewer has called for a dedicated funding stream for economic development, although he's not been specific as to what that source could be, but it could be a sales tax, certainly. And you may remember that in his State of the City address earlier this year, the Wichita Mayor told us that we need to spend $2.1 billion on water and sewer infrastructure over the next 30 years. That's spending at the rate of $70 million per year. And to place that in context, the total operating cost of the Wichita transit system is about $14 million per year. So I can easily see that Wichitans will be asked to approve as much as 1 cent per dollar additional sales tax to be split between all of these interests: transit, library, downtown development, economic development, water and sewer, and there's probably going to be other things that pop up too. There's going to be something for nearly everyone, which is what leads to log rolling. That is, you vote for my tax, and I'll vote for yours. And since we're talking about buses and taxes, many people would be surprised to learn of the very small fraction of the cost of the Wichita bus system that is paid through fares. Considering operating expenses only, the number is 13.5%, and considering operating and capital costs, just 12.1% of the total spending comes from fare revenue. The remainder is provided by taxpayers. So when a bus rider puts $1 in the fare box, taxpayers contribute an additional $6 to fund the system. Something seems out of balance here. Well, why should we spend on an expanded transit system in Wichita and even throughout the south central Kansas region? Well, a recent article or letter in the Wichita Eagle argued this: research has shown that robust public transit service can spur economic growth and downtown redevelopment, reduce traffic congestion, and expand residents' access to jobs and research. Well, I wondered, what research was this writer talking about? There was no citation. Newspapers and their articles, they typically don't include footnotes or citations in the articles, and that's kind of too bad, as now we're left to wonder, where did the author draw these facts and conclusions? But we do know this: transit is an expensive way to move people around, and riders spend a lot of time waiting for buses, which doesn't sound like a recipe for economic growth. And then consider the promotion of downtown development. If it's true that transit is good for downtown development, well, that's bad for taxpayers, as very little is done downtown in Wichita without some type of taxpayer handout. And as far as expanding access to jobs, well, I've done some research, and Cato Institute Senior Fellow Rando O'Toole, who's the author of the book The Best Laid Plans, He wrote this regarding the tremendous boost the personal automobile has given Americans. He wrote, "Since the dawn of the Republic, no invention has enhanced the quality of life of the average American as much as the mass-produced automobile. Americans today are far more mobile, they earn much higher incomes, and they have access to far more consumer goods than 100 years ago. It is no exaggeration to attribute most of these improvements to the wide availability of automobiles." Owning an automobile gives people the mobility that is impossible to provide through transit, and that mobility that is very important for workers. I found many examples in the research that show that automobile ownership was an important factor in finding a job and gaining economic mobility. In fact, one study, when ranking the factors that are important to obtaining employment, a car was found to be more useful than a high school equivalent diploma. So we should be working to increase automobile ownership, especially among low-income people. But the more we tax people to provide transit, the more difficult it is for them to buy and maintain private cars. Finally, consider this from O'Toole on the disjointed logic of transit boosters. O'Toole wrote, "Transit advocates will point out that the autos driving on congested urban highways often have only one occupant. But that is exactly the point. If modern life is so decentralized that carpooling makes no sense for most commuters, how are giant buses and high-capacity trains going to work?" Well, fortunately, no one in Wichita is seriously advocating for rail transit, although there is support for expanding Amtrak, the intercity passenger rail system, to Wichita. The personal automobile is a great advancement over public transportation. It gives people freedom, personal mobility, privacy, and as we've seen from research, upward economic mobility. And isn't it fun to crank up the radio and sing along? So let's be very cautious and appropriately skeptical of our government planners and their goal of taking us out of our cars and putting us on buses.
You're watching Wichita Liberty TV. We'll be right back.
Welcome back to Wichita Liberty TV. I'm Bob Weeks. Well, we've been working our way through Henry Hazlitt's book, Economics in One Lesson, aided by illustrations from Amanda BillyRock. What have we learned so far? Well, we've learned that we need to look at not only the immediate effects of a policy, but also the long-term effects. Those are harder to see. And second, we learned that we need to consider the effects of a policy on all groups, not just one group. And usually we see special interest groups pushing for a policy, and it is they that will be benefited at the expense of everyone else. And the problem, as I think you know, is that it's easy to see immediate effects. And it's also easy to see the effects on the targeted group, such as the home builders in Wichita or the theater company that gets taxpayer-provided paint, as we saw last week. These are the things that are seen. The other stuff is more difficult to see. Houses not built in the future, taxes not paid but services still provided, or the house that goes unpainted because taxes were paid so the theater company can have free paint. These things are difficult to see, and this is the reason why we have what we call the seen and unseen. Well, this week, let's let Amanda BillyRock illustrate Chapter 4 of Economics in One Lesson for us. The title of the chapter is Public Works Mean Taxes.
Economics in One Lesson by Henry Hazlitt. Narrated and drawn by Amanda BillyRock. Chapter 4. So aside from the air you breathe, and the smell of the ocean, and the tweeting of birds, nothing else is free. Everything has a cost. So, as we all know, if you want something, you gotta pay for it. If you want money, you gotta earn it. Working construction, being a doctor, working at McDonald's, being a nurse, and yeah, I know they don't wear those hats anymore, but I wish they did because they're super cute. Or entertaining at children's parties as Groucho Marx, or perhaps even playing in a mariachi band. But what about when government spends money? For example, the stimulus bill that the Obama administration came out with a few years back. They claimed that it created some number million of jobs. But that's not the whole truth. See, where does government get the money to make its payroll for these millions of jobs? Well, in one of three ways: direct taxation, borrowing, and money printing, which is also known as inflation and is sometimes given the confusing name of quantitative easing. And while number 1 is clearly a tax, numbers 2 and 3 are as well. It's just harder to tell. The money borrowed will be paid off by taxes in the future, and the money that's been inflated becomes worth less, so this is another form of taxation. So let's see what happens to private sector jobs when government sector jobs are created. When the Federal Arthritis and Musculoskeletal Interagency Coordinating Committee hires a new employee, somewhere a construction worker loses his job because the money that his employer was using to pay him has now been taxed away. When the Federal Citizens Stamp Advisory Committee hires a new federal worker, you guessed it, there goes a doctor somewhere. Same goes for the Federal Commission on International Religious Freedom, the Federal Interagency Committee for the Management of Noxious and Exotic Weeds, the Federal Laboratory Consortium for Technology Transfer, the Federal Indian Arts and Crafts Board, and so on and so forth. The average person sees these new jobs and thinks, hooray, we're fighting unemployment. But what they don't think about is the fact that every government job created destroys a private sector job. It's a law of economics. So if the Obama administration had been truthful, they would have followed up their original claim with, the stimulus bill also destroyed X million of jobs. There ain't no such thing as a free lunch. So you might be wondering to yourself, is it really that big a deal if a private sector job is lost for every government job? Aren't there still just jobs? And the answer is, there is a difference. There's a huge difference. See, government jobs are funded out of taxes, whereas private sector jobs are funded by people just doing business with one another. One of these is forced, and one of these is voluntary. So that just leaves one question for you to ask yourself. Would you rather live in the forced economy or the voluntary economy? Stay tuned for Chapter 5.
Well, the free lunch myth. The belief that somehow government can spend money at nobody's expense. That's Milton Friedman who wrote that. Here's what's important to remember from this chapter of economics in one lesson. You know, oftentimes people say that if government cuts taxes, and if the government has to lay off employees as a result, that causes harm. What about the spending that the government employees added to the economy? What happens to that, they will argue. But as we've seen, government has no resources of its own. We, the people, have to pay for everything government does. So when government reduces spending, even through layoffs of employees, people then have more money to spend or invest. You may be thinking, what is the difference between a government job and a private sector job? Or more broadly, what is the difference between government spending and individual spending? Well, Amanda BillyRock told us. It is the difference between voluntary and coerced transaction. Happy, Amanda called it. It is the difference between the wealth created when two parties voluntarily trade with each other and the harm that is done when property is stolen. People voluntarily engage in trade with others because each person feels they will be better off after the trade. Well, there are regrets, of course, and if fraud is the cause, well, that's a different problem. But voluntary trade leads to what John Stossel has termed the weird double thank you moment when we buy something at the store. That is, both parties say thank you to each other. But do you say thank you when you pay your taxes? And do you feel better off after paying taxes? Now, I think the government and its bureaucratic spenders feel better off, but I don't think that most taxpayers do. Here's something else. Consider the recipients of government spending. Do they say thank you? Now, they may give thanks to the politicians and bureaucrats that direct spending their way, but do they say thank you to taxpayers? No. I'm afraid that government spending leads mostly to more grumbling. Take our schools, for example. In Kansas, taxpayers provide over $12,500 per year in funds per each student. Now, that's a lot of money. But the government schools continually complain that this is not enough. Nearly every meeting of the Wichita Board of Education contains a gripe session about how there is not enough money. Arthur Brooks has done much research on what makes people happy. He tells us that donating money and time, that is, the giving of charity, illustrates the link between money and happiness. And he wrote, "Givers of charity earn substantial mental and physical health rewards, even more than do the recipients of charity. Empirical evidence that it is indeed more blessed to give than to receive." But the problem is that the actions of government can swamp and overwhelm private charity efforts. In the week after Hurricane Katrina in New Orleans, I read that private donations had reached $600 million, including my own small contribution, and I thought that was wonderful. But then the next news story told me that Congress had just approved some $60 billion in relief, or 100 times as much as the private contributions, and that was described as being only the down payment on what would be the final total of spending. Government spending totally overwhelmed private charity, and if you remember, there was widespread dissatisfaction with the government response, while there were many stories of effective help being supplied by the private sector. So when government taxes us to pay for programs that take the rightful property of one person and give it to another to whom it does not belong, government harms us in two ways. It taxes away happiness and also reduces our ability, our capacity to engage in charitable activity. I'll be back with more Wichita Liberty TV in just a moment. Welcome back to Wichita Liberty TV. I'm Bob Weeks. Well, last year, the Wichita City Council made a decision that we've been talking about on Wichita Liberty TV, and that was the decision to offer property tax rebates to buyers of new homes. The Home Builders Association was able to make the case that the backlog of unsold homes was a problem that government needed to fix. But there was a problem with the way the City Council made their decision, and I've made a video to illustrate. Let's take a look. Hi, I'm Bob Weeks. When our city leaders make policy, we'd like to think that it's predictable, that they're being fair, and that they're being rational. And in an effort to live up to these qualities, the city uses things such as cost-benefit analysis to justify decisions. In 2012, last year, new homes were not selling well. We were told that there were many new unsold homes sitting vacant. So the local Builders Association came up with a proposal. They asked the city of Wichita to give up their claim to property taxes on these new homes for a period of 5 years. So now the city had to decide if this was a good policy. So the city ordered a cost-benefit study. It's done by Wichita State University. Here's the table that was delivered to the city. It has a lot of information, but only some of it was really used to make the decision. So I've excerpted the important numbers, the numbers that the city staff presented to the City Council as a basis for the decision-making process. There are a few things to notice here. First of all, there's one column of figures that's the no incentives option or scenario, and another column that is the incentive scenario. In other words, these are estimates of what would happen if we don't use the incentive program, the property tax rebate, and another column, what would happen if we did use it. And we have estimates of the costs and the benefits to the city under each of these two scenarios. Here we have public benefits, and the benefits to the city are greater under the incentive program than if we didn't use incentives. These public benefits are things like sales tax revenues from construction worker spending, construction material purchases, and other types of property tax revenues. We also have public costs. Now, if the city doesn't use incentives, there is no cost of the incentive program. On the other hand, if we do go ahead with the incentive program, there are costs, in this case about $2 million, in the form of property taxes that will be rebated to the new home buyers. Then we see the net public benefits, which is simply the benefits minus the costs. And finally, we see return on investment, or the cost-benefit ratio. This can't be computed for the no incentive scenario because there was no investment being made and therefore no cost. For the scenario where the city uses incentives, the ratio is 1.48 to 1, meaning that for each dollar the city invests in this incentive program, it expects to receive $1.48 in return. And here's where we run into a problem. $1.48 return for each dollar invested. Now, by the City of Wichita standards, that's a good return on investment. It beats the city's threshold for approving these types of projects, which is $1.30. But look at net public benefits. Without using incentives, the city expects to collect about $2.3 million. But using the incentive program, the city expects to collect only $730,000, about one-third as much. Which would you rather have, $2.3 million or $730,000? Well, here's another question. Which rate of return would you rather promote to voters? One that can't be calculated, or $1.48 return for every dollar invested? So, which policy do you think the Wichita City Council chose on a vote of 6 to 1? Well, the council chose the incentive program. Council members, in justifying their votes, cited the return on investment, the cost-benefit analysis that you see right here. I really don't know whether to blame them or not, because here's what city staff provided to council members and the public. I'm not going to bother reading it to you, but it touts the return on investment, the $1.48 for every $1 invested, but not the net dollars. City staff did not tell the council that the difference between the two programs, the return on investment measured in dollars between the two, is this number here, minus $1.6 million. That's how much worse off the city will be under the incentive program. It will cost the city $1.6 million, even though it has a good return on investment. This is the difference between ratios and quantities of money, something evidently beyond what is taught to city planners, bureaucrats, and city council members. Oh, the city manager did say that this program would spur the home builders to pay their delinquent property taxes sooner rather than later. But is appeasing scofflaws a good economic development strategy? Here's the important question. Do you think the city should choose a program that returns $2.3 million or one that returns $730,000? Remember the goals of policymaking: to be predictable, fair, and rational, making decisions based on reason. What do you think about our city leaders? Well, the Wichita City Council and the bureaucratic management of our city tell us that policy decisions are made looking out for the best interests of the city. But here we saw that the council chose a policy that makes us worse off in dollar terms, even though it has a good benefit-cost ratio. But it's a false choice, a bad choice, and in this case, the council chose to accept a smaller amount of tax revenue. Now, why did the city do this? Well, one reason, a reason that appealed to the Wichita City manager, was the possibility of getting property tax revenue now rather than later. That's because the home builders were delinquent in paying their taxes. The message received by the public, however, was this: don't pay your taxes. Then make a claim of economic hardship, and you very well may get a bailout from the Wichita City Council. Well, it may grant you a bailout if you've laid the appropriate political foundation, and that was done. The Builders Association is a player, a powerful player in local politics. It's one half of the partnership and cronyism that led to the property tax rebate program. It's this cronyism that led City Council member Jeff Longwell, who was running for Sedgwick County Commission at the time, to tell the Wichita Eagle, we're looking at a good return on the city's investment, $1.48 for each city dollar invested, according to WSU, and we're looking at the good it does for the city in a very competitive environment. So Jeff Longwell was willing and able to seize on the part of the economic equation that was favorable to his cronies, and in doing so, he harmed everyone else in order to benefit that special interest group. And the city adopted a program that considered only the immediate effects and ignored the long-term effects. and we adopted a program that was of great benefit to a small and special interest group, but harmful to everybody else. It is for things like this that I hope you take the time to read and study Economics in One Lesson. Well, thank you for watching Wichita Liberty TV. I'm Bob Weeks.